Welcome to the Pump and Dump channel for a video on Monday looking at the market. So just going to go over this news again that Trump announced that they were going to be buying all this oil and filling their strategic reserve again. So I looked into this into a bit more detail. So basically they're talking about 77 million of additional barrels. It says here the capacity is 727. Fill it to the top means they have 650 million in storage at this point in time, which is, about I mean, this amount is huge obviously, but like the reserve, the proved reserve of Diamondback Energy, for example, is like almost 1 billion barrels. Of course they're in a bit of trouble because the oil price is so low they can't justify growing into their valuation, and that's just the way it goes. Now, looking at global oil supply, 77 million would be like almost 1 year's worth of world production, US production 5 years, and that suggests that this would be like a decade-long plan of accumulating this this amount of oil. If we look at some of the stocks here, CNX Resources had a massive day today. Unbelievable, to be honest. It gapped down. I mean, many resource stocks did this. Gapped down to 565, and then it just ran up and got all the way up to $8, which kind of prices in a much higher gas price than we have right now, which would make sense on the basis of assuming that lots of shale oil and gas are going to go bankrupt, and that therefore the prices will have to go up. Range Resources had a similar trajectory during the day, was up to $3.40, then came down again to 250, and then rallied into the close back to 3, and close at 273. So these charts here are looking very bullish on fundamentals, suggesting that these oil and gas prices are unsustainable in the long term. And the problem is that these stocks are like leading indicators. Of course, they are kind of suffering because every day the Dow Jones drops like 3,000 points, like today, which has never happened before. These stocks here, they get creamed on the open, like everyone sells everything. And the thing, like when I was looking at the valuation before the open, I came out like $5 a share, and even during the day, I think I kind of didn't get up above 550 as a valuation, but the stock did rally to 8, so the market is bullish, and it does. There are also other considerations in terms of how the stock has been trading and what its true intrinsic value is, and I look on based upon what it has been trading at, because you never know when it will switch over from one valuation model to another. It could be in the process of doing that right now, which would suggest it will go to $10, which would be extreme, but very possible. With Range Resources, I don't see that same upside. This is already fully priced now, intrinsic value a bit above the intrinsic value, and therefore we will see how this progresses. I'm very interested to see what happens, to be honest. Next point, gold. As you can see, gold has had a good run up last 5 years, and it's now selling off. It went as low as 1450. I think I heard people talk about 1425 to 1450 to be an area where they would buy the dip. We got there and we rebounded to 1500. In terms of the gold stocks I talked about on the weekend, B2Gold, I was saying how at 275 it was cheap relative to where how it had been trading. It did a gap down to 216 on the low, and then it rallied all the way up to $3, kind of, which makes more sense at current in the current scenario. So that's kind of how it went. Zimarfo did the same. It dropped as low as 157. I didn't buy any B2Gold today, unfortunately, but I did buy some Zimarfo because I know it better. So I bought it at 167 near the open, and then at $2 I pinged that lot off because I just wanted to reduce my average. I didn't really want to build my position, increase it. And in terms of what these prices reflect on these stocks is a $1,200 gold price, which obviously we are not at. So that's kind of why I think they had this crazy sell-off. Nobody wants to buy anything at this point in time. The market is very bearish. People are, panicking. They're selling what they can sell for whatever they can get. And the market, the people, the smart money who are accumulating, they're accumulating based upon predefined metrics. And like say $1,350 gold is like one purchase, and $1,200 gold is the next one. And if the price does not come down to there, they won't buy. And if it does come down there, they will buy, and they will even buy more. They'll keep buying on it because they'll say it's stupidly cheap. They'll just keep adding, and then they'll get to a push it to a higher level, and then they'll whether it goes back to 260 or peaks out 230, they'll sell it off from here because they'll be adding it down here lots, and then selling after this big move, because a lot of people, they say they want to buy after it's bottomed, and when it's bottomed like here and it runs up like this, then they say, oh, this was the bottom, so I need to buy now, and buying now is up here, right? So people who come in tomorrow, they might be sold into, and then it just go down. And yeah, next point of order is the price of silver, just under $13. It was down to 12, and as you can see here, I have a buy and sell silver on the on Kitco. And what's happening now is, since the silver price has dropped so low, immediately the stories of shortages are coming out, that there's no available silver, and we need to think about why that is. And a similar thing happened in 2008, I guess, and I think also in 2016, when the the metals prices bottomed. People wanted to buy, but they couldn't buy at the the spot price because the dealers said they had no inventory. They didn't have anything to sell. And basically, what's a dealer supposed to do is they're supposed to buy from the mint, let's say at 15, and then they should like mark up the coin like $2 or $3 to cover their business expenses, make a small profit, and that's it. That's what they're supposed to do. They're supposed to hedge the silver price in the futures market by going short in the futures market to offset the impact that the volatility will do. Is the the volatility will impact the silver price in a negative way, and that will mean that people who are in this business, these dealers, they should have like zero impact on their silver position. Like inventory is the long side and futures market the short side. When they sell a coin, they're supposed to close their futures position, and that means that they just earn the premium on the coin, and then they're supposed to, of course, compete on this premium. And whether that's $2 or $3 really doesn't make much of a difference. But then you have like dealers who want to be cute, and they want to become investors as well, and they say, well, the silver price is most likely to go up, so they buy it at 15. They hold it in their inventory. They don't create a short position in the futures market, and they hope basically that as the market is going up, they can sell and make like I don't know, let's say $3 to $6 in profit with the premium and the gain on the silver. And when the silver price collapses like this and blows up in their face, their strategy blows up in their face, and they are just trapped. They have all this inventory that they paid more for than it's trading at, and as a business, you're not supposed to sell something for less than you bought it. You're not supposed to make a loss, and the only way to then kind of stay in operations is to raise your premium to $6 or $7 an ounce. So yeah, that's kind of where it's at. And then I remember some people who are in the business who are talking in a YouTube video. They're talking about how they, their competitors who were doing this kind of a strategy, where they would just, it blew up in their face. They would, with all their capital tied up in silver, they would not sell. They would just sit on it until the price recovers, or they would just hope to get to sell it at a $6-7 premium. And as as a participant in the markets, you're not supposed to just give people like $20 for an ounce of silver when it's spot is 13 and a normal price should be like $15 to $16 an ounce physical silver. You're not supposed to just bail them out for making stupid business decisions. And that's why I have these two websites, these tabs open from Kitco. And if we go here to buy, we can look at the first mint here. These got some government minted coins. You can see the price is 473, and I've calculated it here. So a box of 20 means you're paying $23.65 for a coin for this 2 of 20. Then on the sell side, I'll take this Canadian maple leaf. Of course, it's not the exact same comparison, but these are government issued coins. And here you can see that the price they're offering you is $12.64, which is less than the spot price quoted here. So if there is really a shortage, would these dealers not be willing to pay a premium to buy your silver at a low price and then sell it to someone else at a higher premium who is willing to buy? Or if if they had too much inventory and this had blown up in their face, would this not be more reflective of that situation, that they're offering you less for your silver because they have too much and they can't get rid of it and they don't want to take in any more? And they just want to hope that that they can sell what they have in inventory at a 100% markup almost. I mean, let's just think about it. Let's take $3 off in premium. Oops, why did I do that? Basically, they're asking for $7 additional compensation to make up for the fact that they bought silver too high and it blew up in their face. I mean, if you just look over the last 30 days, I mean, they're probably buying silver from the mint in the $17 to $19 range, and now they kind of they've got that in inventory. $19 plus 3 would be 22, and that's kind of the price that that's reflected here. That's kind of what's happened. So in my opinion, over the next months or so, weeks, even if the silver price goes up, these premiums will come down as they now average down at these lower prices, getting some new inventory from the mint, or buying in spots, buying from people at spot or below spots, and then they filter it in here, and that's just the way it goes. This is business. Okay, so I'm going to leave it with that. Remember, it's not investing advice. If you want to buy silver, you can of course do that. You can buy an ETF, you can buy physical silver at overinflated prices. It's up to you. I don't really mind what you do. I don't give that kind of advice that people should urgently do something. I just share my opinion, and yeah, if you like the content, you can subscribe. You can leave comments, questions and opinions in the comments section, and with that I'll say have a good day.